Hello, good day, Forex traders. This is a quick video to explain stop orders, or market orders to you guys. So I'd like you guys to pay attention because we are trying to make this as short as possible. So before we go deeper inside that, we'll take a look at this image. Okay. So we just hope this makes everything a lot easier. So you have here buy stop, another placed above price and price keeps going up. Sell stop, order placed below price and price keeps going down. Sell limits, order placed below placed above price and price then goes, and then buy limit, order placed below price and then price then goes up. So this will be like your reference, whenever you are confused, just come back to this picture. We provided it in class as well. But yeah, so let's go back to the chart. So whichever market order you're using, that absolutely depends on where price currently is in. Okay. So in the market, price moves, price changes, For example, you want to know where price currently is at. You take a look at where you're having the movements. This is the weekend, so the market is closed right now. But had it been the market was open, we'll be looking at the exact place where price is right now, where you have your last candle. Okay. So I'll zoom in a little bit. So you might be confused with this. So where you have your last candle, which is this place particularly, is where we have our last candle. Okay. And it was a bearish candle, and you can see where it closed. You can look at the line to the left. You can see that the market closed at 132.251. So we can see that that's the current market price at the moment right now. Okay, so always have that in mind. Whatever market order you're going to use absolutely depends on where price is. Okay, so you take your decisions off that. Okay, so now that we've gotten that out of the table, we are going to look at the different market orders. So the first type of market order, let me write that out. Yeah, so the first one is still called a market order, or you can call it an instant execution. Okay, so market order or instant execution. So here you just take your trading decisions immediately. So let's say you come at the chart and everything lines up for you to get into a buy trade. Of course, if you are a member of the academy, you should understand by now that you need to have a lot of conferences line up for you before you make a trading decision, to make sure that at the end of the day, you're not just gambling, but you understand exactly what price is doing and you're making your decisions based off that fact. So yeah, before every single trade, you should be able to have a particular bias with regards to that trade. So take a look at what are the possibilities that will make this a buy trade and what are the possibilities that will make this a sell trade. And whichever has a lot of more confluences is what you are going to go for. Okay. So if you do not understand this, you do not know how to take trades and the rest of that, make sure that you get into our advanced lessons. Okay, so pay for the advanced section and get in there and learn how to slay the market and make money as well. Okay, so that is that. So for the instant market order we just talked about it. So you all you have to do is you take an instant execution. So you either buy, okay, or sell exactly where pricing. So you just make your decision. This is why I think for this trade, so you just make an entry, you buy or you sell immediately, and your order gets filled for you immediately. Okay, so that is that for the instant market order. Yeah, so the next market order type we have is the limit order. Okay, so the limit order. So LIMIT, limit order. So the limit order basically is you telling the market that you can only fill me in or you can only get into a trade for me once price comes to my desired level. Okay, so this is where I expect price to come back to before I can get into a trade. That could be because of your different reasons. Probably, let me just draw up a chart so it's easier to understand. So, the market is moving higher, and you probably might not understand this movement, but the market moves in waves, okay, creating higher highs and lows, or lower highs and lows. Of course, this will be explained better in the advanced class. But so, what you're trying to tell the market is maybe this is where you are meeting price. So you just got in and you are seeing that price is currently here, okay, and you do not want to get into a trade day because you think that the market is overbought. Okay, so this might sound like it's hard, but these are really simplified concepts in the advanced class. Okay, so but you think that price is overbought already, so you won't like to get into a trade. You don't want to be caught up in a drawdown or in a loss. So you're telling the market to come back to a key level before you can get in. And then a key level will also be explained in class, but key levels are basically levels where you expect that you're going to have reaction of price. Okay, then price that I'm talking about here are the candles you see on your chart is a reflection of what price is doing at the moment. Remember that currency pairs are what we quote here. So like in this instance, this is Euro JPY, okay, Japanese yen and the euro. And the price level where we are currently at is quoted here by the right hand side, okay, this right hand side here, okay. So always have that in mind. Yeah, so you're trying to tell the market, I do not like where you are right now, but I expect you to come back to a place I love, a place I prefer before you can fill me in for a trade. That's what you're trying to tell the market, and the market will do just that for you. Okay, so that is what a limit order is. um for a sell, that's for a buy limit. Okay, so you're trying to tell the market to come back to this level. Once you get to this level, fill me in. So what you do is you copy the price point for this particular level. Okay, that could be 1.777 or 1.888 is the exact level or the zone where you expect price to move in your direction. That's where you get in for your entry. In reverse, for the sell entry, so for a sell limit order, probably the market is moving lower. It could just be anything. You could have your reason why you want to use a limit order in that place and not just an instant execution. So this is just an example. So you expect that you can only get into a trade, of course, if your confirmations align, and you're expecting that once price gets back to this level here, okay, you are going to get into a sell trade. But for now, you think that this is the market is doing too much already, and you don't expect any further movements down. You're expecting that price will retrace for a little bit and then price will continue upwards. Once again, these things might sound really advanced, but we've simplified this concept for you in the advanced class. So it's okay if you do not understand. The concept here is for you to just understand limits and stop orders. Okay. So you're telling the market for a sell limit order. Once you get here, fill in my order, okay, for a sell trade. Okay. The previous scenario here was for a buy trade, okay, and this is for a sell trade. You're telling the market once you get here, fill in my order for a sell trade at this exact price level, and then price will continue going down. What are the reasons for doing this? First, you are able to maximize a lot more profit. Okay, so instead of getting in here and riding the trade for like 10 pips in profit, if it will eventually go in profit, or risking yourself for a loss, you are telling the market to come back here to this particular zone here, and then you can get in for an even bigger move to where you expect price to go for, which could be 50 pips, 100 pips, and all of that. So your risk to reward ratio, RR, your risk to reward ratio is a lot higher with buy limit orders or sell limit orders. Okay, so it helps you in the long run. You apply a little more patience, and price just gets to your level, and you get into your entry and make more money, than risking your account for whatsoever reason. Okay, so that's one of the usefulness of doing that. Then you get to buy it at the cheapest price. Of course, you maximize profit and you wait for price to come back to your entry. Then you can buy it at a cheaper price and then keep on going and riding the trend. Okay. So those are the good reasons or the advantages or pros of why you should use a limit order, either a buy limit or a sell limit. But however, it still has its own cons as well, like just like everything in life. So the move might never come back to where you expect it to. Okay. So you might do all of this and price never actually comes back to where you expect it to. But then again, it's better to be safe than to be sorry, right? So it's still a good move at the end of the day to do this, at least to make sure that you have your confirmations in check before you get into any trade. Um, Another advantage is that you probably may not see what price is doing because you're setting this, and even if you are on your chart or you're not on your chart, this order will be filled for you. Okay. So in the case where this eventually happens and you're not sitting on your screen to be able to spot that price is coming down probably impulsively to this zone, and we are still going to have further movements down. Remember that your bias for a buy limit order is that once price comes here, you are filled in for a buy trade. Okay, so you won't see if you are not on your laptop screen or on your phone to see that price is not actually rejecting this zone. Price is making a huge movement downwards. You won't be there to see that. Okay, but at the end of the day, I think the advantages outweigh the cons because you've already made your analysis, you've made your decisions on why this should you should use a buy limit order here instead. Okay, so that's enough for a buy limit order. Let's quickly go into the stop orders. That's enough for buy limit orders. Let's go into stop orders. So stop orders are really similar in the sense that the same thing applies. The only difference is for stop orders, you wait, you expect that the market will move in your favor. Okay, so remember that for this, we expected the market to come back a little bit for the buy trade for us to get into a buy, and for the sell scenario, we expected the market to go up for a little bit before we get into a sell and ride it downwards. Remember, when we sell, we expect that the charts, for your level right now, we expect that the chart is going to continue going downwards. And when we buy, we expect that it's going to go upwards. Okay. So you buy when you are expecting a movement upwards, and you sell when you're expecting a movement downwards in reverse. Okay. So the difference between the buy limit and the sell limit is you for the sell limit, you expect that instead of price to continue moving downwards, it should come up for a little bit. Then you get your entry filled for your where you put it. Then price will continue going downwards. Okay. Then for a buy limit, this is it. Price is moving upwards, and you expect price to come down for a little bit before you get into an entry and continue riding it upwards. Okay. So that's the difference. But for let me erase that quickly. For a stop order, that is not what you do. In a stop order, you expect that price will continue going in your direction. Okay, so you believe that the trade is going to go upwards. Okay, I'm using those diagrams to make it clearer for you, but like this is a chart. So you're expecting that the trade will continue going upwards in your favor. So you're going to act like that. Okay, so will come down here. So you're expecting that trades will continue going upwards. So you act with that mindset and make your decision with that mindset. That is where the stop orders come in. So I'm going to give you an example of a stop order right now. So this is it. Price is moving upwards. Price is moving upwards, and you expect that price will continue moving upwards. But you do not want to get in here at this particular point because for some reason, which could be a technical or fundamental reason, most of those things you understand them better in the advanced class. Okay, but for some reason which does not suit your bias for taking this trade immediately, you decide that you are going to take it when the trade keeps on going higher. Okay, so what you do is you fill in a stop order, a buy stop order. You are indirectly telling the market that once you get to where my buy stop order is, okay, you can keep on, you can get into a buy trade, and you're expecting that the market is going to continue. So the market is playing. You do not want to get in right now, but you can see that the trend is clearly going upwards. Okay, the trend is upwards, and you do not want to get in right now for some reasons, and you expect that you believe that once price gets to this level, it will continue going upwards. So all you have to do is to fill in a buy limit order, and once it gets price gets here, to get triggered, and you can ride your profit upwards. Okay, and in reverse, the sell stop order is the same thing. So you expect that price will continually go down, okay, from where it is, but you just do not want to get in at that exact place where you are. So you just fill in a sell limit order for where you trust that once price gets there, it will continue going down. And you can just, once price eventually gets there, okay, you get filled for a sell order, and you can keep on riding it down. Okay, so that is just the difference between the stop orders and the limit orders. Yeah, so to explain it better, let's say that price is stuck in a range. Ranges might not be on this. You may not understand it right now because you've not learned it yet. But our premium members will understand that right now. So market is stuck in a range. We're having bounces of this level, and you do not want to get into a buy trade right now. This is where you meet price. Remember how I told you how to know where price currently is at. Okay, so this is where you're opening your chart and seeing price, and you believe that this market is still going to go up. Okay, but you do not want to get filled in right now. Okay, so you've decided that you're going to take this only at the breakout of this range and somewhere here. Okay, so you just fill in, look for this price level to your right hand side. Okay, and input that price level for a buy stop order, and once price eventually reaches there, you get kicked in for a buy trade. Okay, and remember, for a buy trade, you take profit. Your take profit is going to be upwards, and once it goes lower than that, you are in a loss. Once it goes higher than where you filled in for a buy trade, you are going to a take profit. You are going to the profit zone. Okay, so that's for a buy order. In reverse, for the sell scenario, so let's assume that price came up here and started reversing. Price came up here. Let me erase this other one so it won't confuse you. Okay, so I'll just ignore that. So you expect that maybe price came off here and you expect a bounce at this level, okay, and you don't want to take it here for the risk of a breakout, okay, breakouts we've explained in advanced class as well, but you don't want to take it here for the risk of a breakout, and you're waiting to have price maybe form a lower high and a lower low before you can get in, okay, it's still an extra confirmation for you. Then you can just fill in your sell stop order right here. So SS sell stop order, and once price eventually gets there, you'll be filled in for a sell order, and you can keep on riding the profit even until the breakouts and continuation of the trend. And this could be a whole lot of profit for you. But what you've ended up avoiding, the advantages of this is that you've ended up entering at the wrong price. So you've waited for more confirmations before you got into the trade, and you are entering with the momentum of the trend. So the trend is going downwards. So you are not getting in immediately when it starts. You're waiting to see that there is momentum in that particular trend, that it's going on forcefully in an impulse, and it's going to continue. Then you can get in. So remember that the more volume for you as a trader, that's more profit for you. Okay. So, and it's a defensive measure against the margin call, because you're not getting in at the wrong time. You probably will not even be caught up in any of the losses or anything. So you're just waiting for the right time to get in. Once again, your risk to reward ratio will be higher, okay, because you didn't get in here at a level that you'd have to keep your stop loss way too high, okay. This concept may be sounding like French to you right now, but trust me, every single advanced member understands this, and this every single concept here is like baby stuff to them because they've been over it over and over again, okay. So your risk to reward ratio will be a lot higher because you're entering when there is momentum in the market, and you can put your stop a little above a level on the smaller time frames like the 15 minutes or 30 minutes, because you're actually trading the momentum of the trend. Okay, so that's it. That's just one of the benefits of using the stop orders. Okay, so I believe it's clear right now. Then the last type of order we have in the market, I had already cleared what I was writing, or do I still have that? Okay, yeah. So the last type of order we have in the market, so we have stop order as well. We've already explained the stop orders, the buy stop and the sell stop. So the next one we have is the stop loss order. Okay, stop loss order. This is pretty simple. So you are telling the market that I don't want you to go in a loss for too long. So once you've reached this particular point, take me out of the trade. Okay, that is just all it is. So for example, price comes down, continues going down, and continues going down, and then you got into a sell trade, or okay, let's say this is a level, and you got into a buy trade here. Okay, remember that this is now quoted. The price level where you bought this is where you start making your PIP calculation from. Okay, either up or downwards. So you buy here and you're telling the market, if I eventually place a buy trade, which you expect price to continue going up, and the market does not do that, instead price starts coming down, you're telling the market, please, once you get to this level, okay, which you have your reasons why you want it to be this level, most of those things you have to understand them. Okay, you have your reason why you want it to be this level. So once you get to this level, please take me out of the market in a very small loss. Okay, so take me out of the market in a small loss. Reason being that you are doing this to protect your capital, because if you do not put it here and the market keeps on going down and keeps on going down and keeps on going down, this will you'd incur a whole lot of losses and probably might even get a margin call. The margin call is not what you want. It's not what any trader wants. So and directly telling the market, please, once I get into a trade here and price does not go in my direction and even goes in the opposite direction against me, please don't let it go past this level. Okay, for the sell scenario as well. So you get into a sell trade, you're telling the market, if you will not continue to go down, please fill me out once you reach this particular level. So I'm expecting you to go down from where I got in. So this is the sell order, okay, but this is your stop loss, stop loss. This is your stop loss order. Okay. Forgive my handwriting. So this is your stop loss order, and you were expecting to take profit here. Okay. So you are telling the market, if you are not going in my direction, please stop me out here. Okay. So instead of you continuing to put me in more losses, stop me out here, because at the end of the day, a small loss is always better than a bigger loss and even a blown account or a margin call. Okay, which is what you typically want to avoid. Okay, so that is just it. I think that's about all of the orders. Then you'd hear about take profits too as well. So it's very similar to stop loss order. So you have a level in the market where you're expecting that if I place a buy trade here, okay, this is my buy, and my stop loss will be below here, SL. That means I'm going to TP upwards. Your take profit is definitely going to be upwards. Your confirmation for where you set to take profit could be that it's at a key level, or could be that it is a whole lot of other advanced stuff. It could be at a Fibonacci extension level, or could be anything really. Okay, so you're telling the market, please take me out in profit. There's if at that level my profit is $500, or it's 1,000 or 6,000 or 200 or even $10, please take me out there. This is my take profit level. Okay, so TP. So that's take profit is like the direct opposite of a stop loss order. Okay, so don't confuse it. Stop orders are different from stop loss orders. Okay, stop loss orders are these ones you use to protect your account. Then of course you know the difference between a limit stop and an instant execution right now. So this is it about the video. Of course, from the video, you can tell that there's a whole lot of things you do not understand, a whole lot of things that you can learn, a whole lot of things that will make you better. Okay, we have all of that in stock for you. So, if you are not an advanced member yet, you haven't subscribed for the advanced lessons, you've not started enjoying premium content and free signals, please send us a message immediately to get started. There's a whole lot of money to be made, and I'm sure you want to make money too. So why don't you come? Let's make it together. So this is what we are all about here. So send us a message immediately. Get started in the premium class. Meet with other traders, interact, learn a whole lot more things. This is the kind of lessons you get in the premium class. So real detailed lessons with videos and Zoom classes to help make your day better. Okay, so if you are interested in this, please get started immediately. Send us a message. Thank you.